And it says we're live. So welcome back to Stock Tricks with Nick. I think this is our 4th week doing the live streams on Friday. So I feel a lot more comfortable doing this since the first one. I think we've had some improvements over the few weeks, but as always, any improvements that you can give me for the next week, that would be great. If this is your first week here, I do technical analysis. I cover a bunch of the trades that I make, both the winners and the losers. A lot of people on YouTube like to talk about how much they make, how all the trades they make are 100% accurate. They always win. There's never any losing in the stock market. If that's what you enjoy, there are plenty of people out there on YouTube for that. I'm much more open about how trading actually is. I always share my losses. In fact, I try and highlight those because when you share your losses, not only does the loss happen on your computer and you look at that and it hurts, but then if I'm sharing it with you, that makes me think about it again, think about the emotions I was feeling during the trade and kind of bring up another red flag in the future when I go to make that same type of mistake, and then I won't do it as often. So by sharing my mistakes, I learn from them. Hopefully, the dollars I lose in the market will pay your tuition to not making those same mistakes. I do these live streams every Friday, 7 p.m. Central Time. So if you can swing by any Friday, that would be great. If not, the live streams are posted right after they're done. So if you're watching it afterwards and you comment and you want me to review a stock, go ahead and do that, and I'll leave my comment back into the original video. Let's see. Outside of the stock market, or outside of trading, I will be doing personal finance videos in the future. Working on the first one right now, so hopefully get that up in a week or two. But for now, let's go into the stock market. Sorry, I'm just setting things up here. Let's go. All right, so the agenda for the day. If you've been watching the stock market this week, you noticed how volatile it's been. There's sharp up days, sharp down days. Awesome, I'm seeing the comments. So really quick before we get to the agenda, if you leave a stock ticker in the comment section, there's 2 different times that I'll be going over those stocks. BLDR is one of the stocks that I have on my watch list. I'm actually currently trading that, so I'll get to that one. But any other stocks that you want me to review, leave those in the comment section. So yeah, market's been very choppy. We'll talk a little bit about how to handle that chop. There's going to be a couple positions that are being stopped out, but all in all, you don't want to trade super heavy when there's this much volatility in the market. One thing I did really well this week was made a lot of dumb trades and then immediately took them off. And we'll go over the importance of detaching your ego when you're trading. You don't want to go into a trade thinking like, okay, I'm going to be right on this. I have to be right on this. And when the market starts working against you, it's that much harder to just cut your losses small and get out of the position. Outside of that, we will go over the technical analysis of first, any stocks in the comment section. Then we'll go through some past trades that I made this week, some winners, some losers. The watch list that I have going into next week, because the market's so choppy, again, I'm not looking to trade too much next week, but I do have a couple of stocks that I'm watching. And anytime after that, we'll go over more stocks that you guys have. So again, if this is your first time on the stream, I'm a technical trader, so I trade just based on the charts. I understand a little bit about the fundamental analysis, but I'm more of a swing trader, so between that 3 days to 30 days, if the stock's really working for me. And I found that fundamental analysis doesn't usually have that strong of an impact in the shorter time frame. Let's see here. All right. So let's go to the charts. So first here we have SPY. Hey, Brent. So S&P 500, let's just roll through the week. So we had this green bar outside of the upper Bollinger Band, and that's always a time you can start trimming some. If it's the S&P 500 or NASDAQ, that's a good indicator that things are getting a little bit overbought and we're in for a pullback. And it really came on I think that was Thursday last week. Friday, we had this long lower wick. So that means in the day, the index traded all the way down to this 335 area and then got immediately bought all the way back up to the green line here. That's the 20-day simple moving average, and found some support at the close there. So with the market closed on Monday, Tuesday opened up and we gapped lower. So everyone's fear that the market was pulling back kind of got confirmed there with the low open here. And then immediately, and this is something that you have to watch out for in volatile or choppy markets like this, is the first 30 minutes to an hour, it's almost always a head fake. What I mean by that is the market immediately started getting bought up to this 20-day simple moving average right where it closed the previous day, and then it started selling off and sold past the opening point, and it closed lower. So at this point, things are definitely shaky. You don't want too much on your positions. You want to stay as cash as possible. The next day we had at least a higher low here. It's about the same high, but again, you saw the high a day stopping out right at that 20-day simple moving average, and the convergence of the purple line here. That's the 8-day exponential moving average. I love that moving average for a technical trader, especially in the short term. It seems to find good short-term support resistance, and it did so on this day. It got sold off. That was Wednesday. Thursday, we opened up higher. Again, just could not break over that 20-day simple moving average. The high day landed right at that and then pulled down. And then today, going into the weekend, not as many people want to be holding long positions as the market stays shaky. So we opened up a little bit, gapped lower, tested the 50-day simple moving average. Again, this is for S&P 500, and then closed right at the close of the three of the past 4 days. So definitely showing weakness, bouncing between that 20-day simple moving average and 50-day simple moving average until we get a close over the 20-day, a close, not just a test over. The market's going to stay shaky, and I'm going to keep position size light. So outside of the S&P, let's take a look at the NASDAQ, QQQ, and hopefully you guys can see the ticker I added in the top right here. That came from one of the suggestions, so keep commenting any suggestions you have for this live stream, and we'll keep improving. So let's zoom in here. Very similar chart, but because the NASDAQ was a little bit more aggressive on the uptrend, they were the stocks really pushing the market higher. They tumbled down just as quick. And let's see here, where's Tuesday? Yeah, so Tuesday we closed right at that 50-day simple moving average. Wednesday had higher high, higher low, but look at this volume, much lower volume on that, which means that it could be more retail money coming in. It doesn't have to be, but you're looking for volume to really either confirm or deny your hypothesis, and mine was market's still going down. In the downtrend, if we get an up day on light volume, that doesn't look good to me. That says bear flag. And of course, the next day we get this bearish engulfing candle, which means the entire candle's high and low is higher and lower than the previous day. So bearish engulfing, bad candle to look at. Low of day, again, bouncing off that 50-day simple moving average. And then today was really the first signal for more downside for me. closed under the 50-day simple moving average for the first time since, since April 13th. So we had a great run here, but it's now time to start defending your profits. At this point, when the index closed under the 50-day simple moving average, I got aggressive with some short positions. So taking the opposite sides of trades on stocks that were weaker that would serve as a hedge for some of the long positions that I still wanted to hold onto. If the whole market pulls down, I'll probably lose a little bit going into next week, but still have some positions that were holding good relative strength that I'll talk about later. All right, let's go quick back to the agenda, or CHOP. Let's talk about CHOP. So as the market is this volatile, up days, down days, a lot of things come into play. The first for me that I noticed is I overtraded this week. And this is something I knew of. I know myself. I know when it gets choppy, I want to hedge here, take this position, and I become too kind of scattered mentally. So I did a better job this time around when the market got choppy to hold myself to a couple less positions, but could have done a way better job with that. But position sizing. So usually I trade maybe like an 8 to 10% of my portfolio as my entry position. And then if that gets working for me, then I'll add more. I'm always adding to winners, scaling out of losers. Rule number one with trading is never add to your losers. If you do that, you're just going to be compounding a stock that's losing. You always want to be adding to stocks that are showing good relative strength compared to the market, taking money out of positions that aren't working for you. And that kind of gets into the ego thing that we'll talk about later, but especially in this choppy market, instead of the 10% that I usually, 8 to 10% I'd say, that I usually take on a beginning position, I scaled that down to 5%. So starting off with a lot easier position sizing. So if I'm wrong small. If I'm right, that's great, but again, until these indexes close over their 20-day simple moving average, it's not time to bet the house. We had from April 13th until now, April 19th, whatever it was, until now, where all the trends were working in our favor. That's when you want to apply pressure, really push. When things are shaky, not time to push the envelope. You want to be holding on to your profits, protecting those. Those are profits you worked hard for. So position sizing, number one. The other thing is stop losses. So stop losses are something that I always trade with. Typically, I put my stops between 6 to 8% below my entry price. I always try to get a really good entry where the stock's not overextended from a base already, so I can put that 8% under 8% stop under a simple moving average. If there are two simple moving averages just below the current price, say the 20-day simple moving average and the 50-day, but they're a little bit further apart from each other, I'll do what's called a bracket stop loss, where I'll take the 10 shares that I have, split it 5 and 5, and have one stop under the 20-day simple moving average. Always put your stops a little bit under whatever those moving averages are in case algos do try to pull down to exactly that point and get you to stop out. So always place it a little bit under there, but I'll put it under the 20-day, and then with the other half, I'll put under the 50-day. That way, if the market pulls back but then pops right back up, I'm only getting knocked out of half my position. If the market pulls all the way down, breaks both of those, and then shoots back up, I'm on small position sizing. I'm not hurting that badly because I lost one trade. Losing is going to happen in the market. If anyone's telling you that all their trades are winners, they're lying to you. All right, so position sizing and stop losses. One thing really quickly about the stop losses that I've been getting a lot on StockTwits is you should always keep a mental stop loss, not a physical stop loss already entered, because algorithms will look for your stops and get you to stop out. That's putting a lot of faith in yourself that I'm not willing to put in myself at this point. Because time and time again, I will, if before, when I was not diligent with risk control, I would have mental stop loss, and then the price would get close to that, and I'd be like, I could bring this mental stop down a little bit. I could bring it down a little bit. And if you're not completely emotionless when you're trading and you're like, okay, the stock hit that point, I'm out, there's no benefit of not putting a physical stop loss in. And even if you are purely like unemotional trading, what if you are at the bathroom when a stock pulls down? What if you're doing something else? What if you're not looking at that exact stock? What if you have like other stocks that you trade? So for me, a physical stop loss is always worth the few stocks that few trades that I'll get stopped out on because of algorithms or market makers looking for those stops. Will I adjust my stops every day? Not every day. So if a stock is still kind of working from a base, and the market's in a significant or a consistent uptrend, I'll keep my bracket stop losses. I love the bracket stop losses when I first enter a position, and then if the stock starts working in my favor, then I can move those both up to my entry position to lock in a winning or break even trade. But if the stock market starts to show some volatility and I want to protect profits or even just protect downside risk, then I'll move those stops up. But other than, I would say my entry, either I do the single stop or I bracket it. And then if the stock moves over a multiple of my average winning trade, so right now that's around 8%. So when I win on a stock, I usually am up 8%. So once I go over that point, I'll move my stop up to my entry position, lock in that winning or break even trade, and I'll usually take a little bit off of the position just to have profit at that plus 8%. If it goes to plus 16%, another multiple, take a little bit off, maybe move my stop up. I usually like to give the stock wiggle room at that point because it's been working in my favor. There might be some short-term sellers just to bring the stock down, to take some of their profits of their own, and I want to give the stock room to wiggle. So that's why I love keeping my own trading stats. I went over that last video, but having that average win in your mind for stops, for taking position size off, that always helps in the long run for me. So good question though. All right, what was else on the agenda? The importance of detaching ego. So let's just jump to one of the mistakes that I made. I have 4 stocks, again, because of over trading, that I shouldn't have taken, but thankfully I got out pretty quickly. So first one was Tesla. So let's zoom in here. Let's do 3 months. All right. So on, what was this? Was this Wednesday? Wednesday, yeah. So on Wednesday here, because I was thinking thanks Lucas, because I was thinking the market was gonna continue to pull down, I started to set up some short positions, and you always wanna get a stock that's showing some kind of pullback to start a position. So I tried to do that with Tesla on this day of higher highs and higher lows, but I shorted this. So I went against, I sold shares that, trying to get the price here. So I sold some shares here when the stock started pulling down. And then I was like, this is not one of the trades that I usually make. I usually make it when it's like bouncing off a moving average, then moving lower, or breaking the low of the previous day. So in my mind, I'm like, Nick, this isn't a trade that you usually take. Let's be extra careful about this. So immediately I put my stop loss at the high of the day. And of course, it moved a little bit higher, hit that stop loss, and I was out for, I'm trying to do the math here. This was 36 and stupid Bollinger Band. So like a $50 loss, just super quick. Wanted to give my portfolio downside hedge, but didn't work out. It was a dumb trade to put on because it wasn't part of my strategy. That's not a setup that I usually take. I should have just wiped on it. But because Tesla's has kind of that, because it has that emotional connection, because it's been so volatile, such a high winner, and then pulling down so sharply, I thought if something goes down, it's going to be Tesla very quickly. This will be a great hedge. Didn't work out, but got out quick with a small loss. Another one that could have been disastrous if I wasn't honest with myself was NKLA. So earlier this week, they partnered with GM, and then came out that maybe the company is allegedly completely fraud. So when the stock started pulling down the next day, so I didn't buy on the first day. Once it's this far up, the stock's gone. I'm always trying to buy within 5% of the base that it's been trading in. So I didn't trade this on the upside here. I waited until it pulled back until right about this area, this 43. And then I noticed the 50-day simple moving average was right under there, along with the convergence of the 8-day exponential moving average and 20-day simple moving average. So I'm thinking, okay, this is just pulling back after a big win. Short-term buyers are trying to take their profits out. I have 3 levels of support that could hold here. Let's buy at this point, try and get a rebound. Completely against my trading strategy. Should not have taken the trade. I should always be buying when stocks are moving higher once they have momentum in their favor. This was the opposite. This was selling off. But thankfully, I did put a bracket stop loss, one right below the 50-day simple moving average, and then one below the 8-day and 20-day. And this was where my ego came, or I guess left. Because once my first stop got hit, I'm like, this is dumb. Why am I trading this? This is not a setup I usually take. You're trying to overtrade at this point. So shortly after that first stop got hit, I'm like, let's just get out of here. It's not working. And thankfully I did, because it dropped. Man, the chart's off. It's definitely not up 40% today. It was down like 15%, but it dropped like another 28%, I guess that is. So stops got me out of that trade when I needed to, and then just taking a moment and being like, is this a stock that you should be trading? No. Then I got out for the rest. Another small loss. Could have been a huge loss. So whenever you put on a trade, never feel married to that trade. If you're a swing trader and something's working against you, or you're like me and you just made a dumb trade that goes against your system, never feel bad about admitting that you're wrong and taking that off. It's okay to be wrong. I'm wrong over 50% of my trades. I lose on 50% of my trades, but when I win much larger. That's what keeps me profitable. What would keep you, but if you're wrong and you don't admit you're wrong, staying wrong is going to cost you a lot of money in this market. So the sooner you could admit and know that you're wrong, the better. Let's go with another one, Overstock. Basically the same setup as NKLA. Popped up with the, what stock was that? RH.com, I guess it is. Okay. With their news up 20% on an earnings beat. So this and Wayfair both popped up along with it. I didn't get in on the pop-up because it was already overextended from the base, but I am seeing this convergence of the 8-day exponential moving average, 50-day simple moving average, 2 support lines on the downside. So let's try the trade. Let's see. Bought in at 80.40, sold out at 77.30 and 78.13. So same thing. I put on the trade, realized it was dumb, got stopped out with my initial stop, and then when the stock made a new, not daily low, but afternoon low, I just scratched the rest. It was, again, a dumb trade, But good thing I got out, because today it was down 12.5%. So again, being wrong is going to cost you a couple dollars. Staying wrong can cost you a lot of money. That's 3 of them, and one last one. And see, this is good for me because I'm noticing the same pattern of trades that I should not be taking here. Everything is momentum's pulling back, working against me. I was trying to be cute with the trade and get a better price to get in at, and it eventually worked against me. This one, SHLL, Tortoise Acquisition, has been on a monster run, so it's been on my watch list. I've been waiting for that nice lower risk entry. This would have been a great one. You could see that popped up and then pulled back to that 8-day exponential moving average, then moved higher. So that's what I was waiting for here. I saw it pulled back, even dipped a little bit lower, which I like to see when I'm not in the trade, just so it's stopping out other short-term traders. Pop back up, pulled back to the 8-day exponential moving average this morning after it was like 9:30 my time. I'm Central Time, so that's 10:30 Eastern Time. At that point, it was sitting right at the 8-day exponential moving average, and it had dipped below that in the first half hour. So I put on a trade saying, okay, this might hold the 8-day exponential moving average and then have that same kind of popping ability. The first one was 57%. This was another 40%, another 40%. So this was a low risk, really high reward trade if it would work out. But the second it went back under the low of the day, I just scratched the trade. Wasn't working. The market was set to pull back. I wanted to lighten up on exposure. And again, this was me trading when the stock was moving down and not up. You might not get the exact bottom on a bounce, but you're going to be buying a stock that already has momentum, that's already kind of proving itself to you when you're buying, when the stock moves over a high of the previous day, or kind of like a diagonal like this. That's not what I did, and it did not pay off. So those 4 trades were all really dumb, really quick, but because my position size was so small, and because every trade I had, I put stop losses in, I didn't emotionally feel attached to any of the trades. So it was really easy for me to just wipe them off and be like, oh, Nick, you're just a little dumb today. That's fine. Just don't stay wrong. Let's see, getting some good stocks here. All right, let's jump back. All right, let's go to some stocks from the comment section. So BLDR I'll talk about in a little bit because it was one of the stocks I traded. Boeing. Yeah, so I was looking at Boeing for a little bit here. Not typically the stock that I like to trade. I want stocks that have already risen maybe 100% from the low. And I guess it did that. So usually I want a industry winner, a growth stock that's doing well, then pulling back to a support line and then bouncing back higher. This one had jumped up in the middle of June and then has coiled really, really nicely for a long time here. But then just recently, so if I draw a line here, we'll just do that. That would be the point that I would look at to buy, because every time it's gone up to that line, it hasn't been able to hold those prices over. So I'm working my way down the stock, but do want to see momentum to come back before I buy. And then this week, let me see if I can zoom in without getting too cluttered here. So basically the 50-day simple moving average, yeah, that kind of looks good, is highlighted here. You have the 20-day and the 8-day exponential moving average. Because this is coiling really tightly, all the moving averages are also getting into the same spot. But unfortunately, this broke to the downside. So if you saw it break and close above all these moving averages, once you close above that, now they become support. In Boeing's case, they closed under, so that's going to be resistance on the way up. So it is dipping here. On the way up, you might run into some issues trying to buy, or might find some issues trying to break over these moving averages because there are 3 different types of traders: long, short, medium. No, short, medium, long. All here looking at the same spots, probably selling into that support. Along with that, you got a ton of volume in the early pop here, and with the second kind of rally point here. So that's going to create a lot of overhead, which means a lot of traders are trapped in this area. So between like 180 and 230, a lot of traders bought positions here thinking, all right, here we go. We have a long way to get all the way back up to pre-COVID. And then it immediately pulled back. And most likely it wasn't a lot of institutional money that got trapped there. It was probably a lot of retail money. So with a lot of money and a lot of overhead here, once the stock moves up to get to their price range, a lot of people will be just taking the trade off, being happy to be break even. So you're going to see selling at this area as well. So that's why I like to trade stocks that are near all-time highs or making all-time highs, because there's just less resistance up top that it could run into. So Rego, that's Boeing. So Microsoft. So Microsoft was a trade that I had on earlier. Got stopped out when it broke the low of this peak day here. Since then, it's kind of been bouncing around. Let's see here. Lots of volume in the selling. So that's institutions getting out. This isn't retail money leaving the trade, which is not a good sign. The one green day you saw had lower volume than the 3 selling days. It was still a lot of volume, but maybe people that were still caught here were looking for a short-term bounce to get out on. Couldn't close over the 50-day simple moving average since it's broken underneath it. This day closed right at it. And then Thursday, we gapped up right at the 8-day exponential moving average, but couldn't hold those prices, closed well under it. And then today we got lower high, lower low. It looks like a little bit lower volume, but I noticed that E-Trade, there's a lot of like after hours volume that doesn't get put in until the next day. So got to be careful with that. But if you're already in Microsoft here, 2 areas that I would be watching is the low of today as support. So if the stock moves under 201, that would be cause for concern. The other one is the low right here, this 198 area. Let's see if I zoom out. Yeah, so 198 has the low on this day, July 24th, and the low on the earnings day here on 6/30. So that'd be 2 areas of support that I would look at. So if it breaks under that, that's where your stop should be. Get out while you can. On the long side, if you get a close over like 212, where it's closing over the 8-day exponential moving average, over the 50-day simple moving average, then you might start get more traders bringing this back in. 20 days right there as well. But you got to see the move come back with volume, because this is a lot of volume getting out the door. All right, MXIM. We'll do one more of these. Let's swing to some trades that I had been watching this one as well. So if we zoom out here, get the full picture, ran up 47%. And then this is actually zooming in here. This is actually like the ideal setup that I like to trade, where you get a move up and then a pullback. Let's do the math here. So this pulled back around 11%, rallied up back to that same point or a little bit below, pulled down 6%, 5.5%, went back up, pulled down just a little bit to the 8-day exponential moving average, 1.5. So each one of these pullbacks are on less magnitude, and then it kind of creates that cup and handle point here, and then you get that breakout, little kind of sideways movement in the top part of the breakout, and then I'm not familiar, was this earnings? No, it wasn't earnings. Anyway, you got a huge breakout with tons of volume here, and then it started trading sideways. So I missed this initial part, this ideal breakout here, but from this point, stuck right at that 8-day exponential moving average, kind of moved up here, but once you got the red candle outside of the upper Bollinger Band, brought it back in. I was still watching it, but then again, it broke to the downside here. So now, let's see, it's now 10% off that mini high there. And then today, so this was kind of, we talk about bull flags for a good entry to go long. This was a bear flag, so it pulled down here, but then you saw basically the same high on the day, but higher lows. So that's bringing a little bit, a few traders in, but then it broke, made lower lows, failed 2 days in a row to break over, or at least hold over, the 8-day exponential moving average, and closed now the lowest in closing this gap here. So not something that I would be looking to go long right now. If you're looking short, if you're already long and still long into this afternoon, you can use this same peak here as your support line. So it's not exactly flat. So again, do your own research, but like 62.50 area. Let's see, that's 3% down from the low. So if you're already in this, I would use that as your support area. If it breaks below that, you got to get out. Got to hold on. All right, so I see all the comments of the other stocks. I'm going to run through a couple trades that I made this week, and then we'll wrap up everything with the additional stocks. So one that I traded that has been giving me a little bit of trouble is SFIX. So like I said earlier, this was a similar pattern that I was looking for. We saw this long base being built here. Oh, let's zoom out to actually give the full story. So huge move up, then pulled down, and then each one of these pullbacks now are on basically the same or less magnitude there. And this is where I drew my line to get in. And let's see, got in at 25.78, so it was a little bit, it was like right at that line. So once the stock moved over the entry point here, I bought there, again, only with 5% of my portfolio because I'm trying to keep position size low during these choppy markets. But closed higher, so immediately started working out for me. Next day, opened a little bit lower, but I had my stop below I had a bracket stop here to start off, one below the 50-day simple moving average, one below the 20-day simple moving average, to keep me in the trade if there was just a small pullback, but immediately popped. You see this long upper wick with huge volume. I don't know who got in at that point, but because volume was lighter on these pullback days, once you add a ton of volume, of buying volume, it just has to scale up rapidly. And when it was up here, I sold, I think 10, 15% of the position because it made a multiple of my average gain. So that was my rule. And then I also put my stop back at my entry point to lock in a winning trade there. So the next day, it moved even higher up. Didn't break over the high of this peak, but was doing well. And then on Thursday, let me bring this down a little bit. On Thursday, I don't know why it said I bought. On Thursday, I sold a little bit because one of my rules of selling into strength is if you get a red candle over the upper Bollinger Band, it's time to take a little bit of profit off. Doesn't mean you sell the whole position, doesn't mean it's bound to go down, but that's a good signal to just lock in some profit, move your stop up, and make sure it's a winning trade. And good thing I took some off, wish I took more off, because today it was down a lot. I did scale out a little bit as well today just to keep my overall portfolio light. We see it bounce off the 8-day exponential moving average and still close above, so I'm holding on to about half the position at this point with my stop right at my entry. So is going to be a winning trade unless it gaps way lower on Monday. It's not something I can control. Hopefully the profits that I took up top will make it a winning trade, but looking for closes above the 8-day exponential moving average to hold me in the trade. One thing that I do like to see is the lower volume on the 2 pullback days where we had high volume on the 2 buying days, which is good. So that's Stitch Fix, PENN / Barstool. So the only thing keeping Dave Portnoy profitable these last couple days have been the giant pop in Barstool. So this was something that I've been watching. I was tweeting about it. So if you follow me on StockTwits, that's great. I do about, I want to say like 50 charts a day on StockTwits after the market's closed. But on Twitter, I'll post usually 3 or 4 that I'm really watching closely. So give that a follow. It's Stock Trick Nick on Twitter, and then Stock Tricks with Nick on StockTwits. So watching this one, let's zoom out to get the whole story. During the pandemic, it was down to $4. Has had a monster run up here. You can see kind of the ideal breakout pattern here with lower pullbacks, and then a breakout there. I missed that one. So I'm looking for the same pattern again here. And it pulls back, finds some support at the 20-day simple moving average, bounces up. I did not take the trade here because I was in other positions, didn't want to over leverage my portfolio. Thankfully, it had pulled back, and then I drew my diagonal like this. And we had, again, this lower wick on the previous day, knocking out the few days before it, their lows. So if anyone's trying to put their stops right below the low of a previous day, they would have been wiped out. So that's something that I love to look for before entering a position. That usually signals that it's not going to just drop down again on you. So got in on this day. Let's see the price 56.03. Let's see. So that was a little bit higher in this wick. Yeah, a little bit higher here. The next day went down, touched the 20-day simple moving average, this green line, moved right back up and closed in a green hammer formation. And again, looking at this, we had a big volume day on a buying day. That's good. Low volume days or consistent days when it moves sideways or down. That's another good sign. And then yesterday, Thursday, huge buying volume day. Let's see, I took a little bit off the top here when it made a multiple of my average gain, moved my stop up to my entry. So that's now a winning trade. Took some more off today when it broke under the low of the previous day. And now we got that red candle kind of over the Bollinger Band. A little bit weird because it got so tight here, but low of the day, bounced off the 8-day exponential moving average, hoping that holds up on Monday, but we have some short positions that I'm in to cover that if it doesn't. So one of the short positions that I'm in is FSLY Inc., FSLY here. So let's zoom out to get the picture. So I think we might have talked about this on an earlier thread. If not, this is creating a perfect head and shoulders pattern. So you get the left shoulder here, the head, and then the little right shoulder. And now we're getting a little dip, and then kind of the actual end of the shoulder here. So I took this short at the close on Wednesday because market started to get shaky again. I wanted to give my portfolio some downside hedging. So took this short with 5% of my portfolio. The next day, it made a higher high and higher low, but that high broke through all the moving averages, but couldn't hold those prices. So moved down and closed basically at the low of the day. And I added to the position another 5% of my portfolio short at the close there because it showed it couldn't handle those moving averages. Those are now resistance because we've gotten a close under that. And then today we saw 8% pullback. That's great. When it pulled back to around -7% today or -6% today, that was -8% on the position. So I did take about 25% of the position off there, took another few shares off when it was -9%, and then it got bought back up a little bit. So still holding, I'd say about 6-7% of my portfolio short on this one. It's under all those moving averages. I got in right at a good spot, and kind of the opposite of what you want to see going long. You see this pulled back on high volume. The few pop days were on lower volume. Pullback as well on lower volume. So not super confident, but I've already scaled out some profit. Moved my stop back to my entry. So that's going to be owning trade on the short side. One other one that I want to talk about that's showing good relative strength. So during a market pullback, you shouldn't be just buying the pullback. You want to buy once it starts showing there's strength, showing there's momentum coming back. Like I said earlier, I made a lot of mistakes not doing that, and 4 trades made that were dumb. But one thing that you can be doing is looking for relative strength. And what I mean by that is when the market pulls back, what doesn't pull back as much, or what stays green on a red day? If the stock has already been a market leader and then the market pulls back and is showing relative strength, that is a really strong stock. So if you're saying like, oh, Nick, Ford didn't pull back as much as Tesla did. Tesla was down 30%. Ford was down 2%, showing better relative strength. Ford really never got off the ground after the disease. So it wasn't a market leader. It hadn't had a huge gain. So of course it's not going to be as impacted with a market pullback. You want to be looking at the relative strength of market leaders. So that's what brought Snapchat to my attention here, because we're kind of getting that bull formation with or like a cup and handle, saucer and handle, whatever you want to call it here. So I drew my entry, I think, let's check the price, 23.96, 23. Okay, so I just got in when it broke the high of this green candle right here. Because as the market was pulling down, actually, yeah, I have price relativity. So this white line down here, sorry, I should have explained that, is the price relativity compared to the NASDAQ. So I want to buy stocks that are showing increased price relativity. And that's what we got here. Look at how strong this is being compared to the market. So popped over here, bought in at that price. The next day it got shaky on me, but still stayed completely above the rising 8-day exponential moving average. And then today, as the market pulled back even further, this showed better strength, up 3.8% today. Huge volume day. That's everything that I'm looking for in a stock showing relative strength during a market pullback. Now, if the market bounces up, this is going to be like a buoy. It's just going to go that much higher. So this is a stock that I'm holding. I did sell a little bit because we got that red candle over the Bollinger Band. Didn't like that. Let's see, what did I sell this? I think I might have sold for a little bit of a loss. Let's see, 23.14. Yeah, a little bit. Just tried to shave. I tried to shave all my positions down yesterday going into today just to keep the portfolio light there. All right, so we'll skip that one. Really quick, if you do find this information useful, please subscribe to my channel. This is the 4th week we've done this, but every week we're getting more viewers, and it seems like people are enjoying their time here, learning some things. So if you are learning anything, a like, a comment, subscribe really helps the channel grow. YouTube will push this to more and more traders the more people interact with the video. So today is definitely the most comments we've gotten in the live stream, which is great, but keep that up. And if you find any value in these videos, subscribe. I'm doing this every Friday, 7 p.m. Central. All right, let's jump to a couple more of your stocks here. UNH, United Healthcare? United Health Group. All right. All right, here. So yeah, going into this, we had a little cup and handle here. That would have been a good buying point. Let's draw that correctly. Right there. That would have been a good buy. If you're already in this position, let's check volume, price relativity. All right, so we have, what would that be? Wednesday, Thursday, touching off that 20-day simple moving average, pulling down, not being able to hold the price over there, closing under the 8-day and now under the 50-day simple moving average. So momentum's not in the favor of this stock at this point. So is this a stock that you're buying right now? Absolutely not. You want to buy while momentum's in your favor. If this is a stock that you're already in, consider scaling some out. One thing that I like to do is just trim positions if it's working against me. You don't have to be right with all your money to make money in the market. If you trim your position and it starts going up, you can always buy into strength, buy more while the momentum's coming back. But if a trade or a stock's working against me, I'm trying to have as little as possible when it hits my stop, because then the loss is smaller, and the more small losses you can have, the more profitable you'll be when the big wins come in. So to me, definitely not a stock I'm buying right now. It does have some support if you're already in this. Use the low of today, Friday, kind of as a stop. But like I said before, always do a couple cents, or depending on how much, it's $300, couple dollars under that, just to kind of avoid getting hit with an algorithm to pull down, hit that stop. But yeah, not something that I'm trading right now. If this can start getting momentum again, this is a nice pop-up and then like coiling action, but it's just not in our favor right now. We want to put money on the table when as many indicators, as many traders, or as many, what am I trying to say? As much probability is in our favor as possible. Sorry, completely stumbled through that. All right, that's UNH. Coupa. Let's see, is that? Yeah. All right, so this is another one that I traded earlier. As you could tell, I'm a technical trader because I saw Coupa and I was really hoping it was COUP. I don't know too much about like the actual businesses. But yeah, so this was a stock that had been an industry leader. Look at this massive growth here. Coiled, kind of pulled back a little bit lower, but again, I like that because it knocks everyone out who had their stop below there. So I'm starting to get interested on this rise back up. Let's see, I bought at 308.40, so I drew kind of, wait, what's 308? 308.40. Yeah, so I think I used the high of this red day here to enter, and then it popped up on that day. So that's where a good entry pays, because you could put your stop below this 50-day, and it's below the 20 as well, to give you a couple support lines. And then once it pops up, I started pulling out of that trade. And then I pulled out completely when it broke under the low of this high candle here. Market got shaky, I wanted to get out. And then it was going into earnings, and I have a personal rule. I never hold a stock into earnings unless I have a 10% or more buffer of profit. Even with 10%, I'll probably scale out of a little bit, take some profit off the table, because earnings are always a coin flip. You saw with Peloton's earnings today. Peloton, let me jump really quick to that. Peloton crushed earnings, crushed expectations, was up 10% off of the close of the previous day, and then just immediately sold off all the way and closed at the 8-day exponential moving average. So just because earnings are great doesn't mean the stock has to go up. It's always a coin flip, always a coin flip. So because coin flip isn't more probability on your side, it's 50-50, only play earnings when you have some profit buffer. So earnings didn't work out. I am not sure what happened at earnings. Did they beat? I don't know. But whoever's trading the stock at that point did not like what they heard on the call or the earnings, because it's just been in a free fall here. So definitely not buying on the way down. And if you're already in the stock and haven't sold yet, you can use just below the low of today is also the high point of this area right here. That's, yeah, not completely flat, but you get the point. Look at the highs of the previous rise up and the low of today as a get out point. If you're correctly position size, like if you're keeping your position size under 15% of your portfolio and you always have stops, you'll always get out of a trade before it completely collapses on you, like this has been doing. And if you're in a trade right now that's completely collapsing against you, it's good to just get out of the trade, relax, really like take that as a lesson learned, and then come back with more diligent risk control, because being wrong is okay, staying wrong is what will hurt you. So not something that I'm looking to trade for a while. This will have to bounce, start coiling up again to give a good like breakout pattern. But watch the highs here for some support. All right, Apple. How are we doing on time? All right. Apple, similar to the rest of the market, it's been bouncing. Hasn't really hit that 50-day simple moving average, but does have this gap in the chart where if the entire market pulls back again next week, it would probably be the best for Apple long term if that gap just got filled, and then it could start moving up again. But to that point, it's got, let's see here, 14%. So this is another one. If you're a short term, it's like swing trader, then having stops at 5-10% below some moving averages to get you out of a trade is what you want to do. If you're an investor in Apple, you're looking at fundamentals, you're looking at way longer charts than this. This video probably isn't for you if you're a long-term investor in Apple, but if you're short-term, if you're a swing trader, technical trader, this is what you're looking at. Let's see. Yeah. This is me going off the cuff right now, but until this starts moving up and gets momentum back in your favor, a close over the 8-day exponential average will be the first sign of some strength, but not a stock that I'm looking at buying right now. And Target, yeah, I know. I keep watching Target. It always erases my lines on here. Oh no, there it is. Okay, so yep, bull flag. Completely agree. Have been watching this diligently, waiting, and it's just about there. But now are we getting like a little bear flag here with a little run up here? Closed right at the the convergence of the 8-day exponential moving average and the 20-day simple moving average right here. a close over that, especially a close over that with buying volume, and then this could really start to take off again, because this has shown so much strength, had great earnings. Let's see what it's down. It's only down 8% from the top. Yeah, definitely a stock that I'm looking at going into next week. Great call out on that. Mark Minervini is one of the people I follow. He does not follow me. If you are on Twitter, Mark Minervini is an absolute must follow. I've read his books before. They are probably the #1 influence on my trading strategy now. So he called both of the pullbacks last week and this week, and posted that on Twitter for everyone to see. So he's a great follow. Always getting good stock tips from him. So make sure you follow him. And this is E-Trade, yeah. So if you want to trade on E-Trade, there is a link in the description below. I think you get like $25 if you deposit $5,000. And I have a video showing how to set up all the different moving averages, Bollinger Bands, all the price relativity stuff, way back in the beginning of my channel. So you can check that out. He's following me as well. I'll have to check that. That would definitely make my day if he's following me. All right, let's get to just a couple stocks that I'm looking at. This was in the comment section as well. So Builder's First Source. Let's zoom out, get the whole picture. Great strength off the lows, 170, 180% pulled back, popped back up. So I missed this entire move, but just because I miss it doesn't mean I'll miss the next one. And look at this. It's ideal here. So pulled back 13% to the 20-day simple moving average, found some support there, bounced back up, couldn't break. It went over the high, but really couldn't hold that. Market started getting shaky around here. So now I'm looking at, is this holding good price relativity? Because if that's the case, this is a market leader holding good price relativity. Let's see some low volume sell-offs, and this is going to be a home run when the market does bounce back. So pulled back. Got to drag this down to see where I got in at. Bought at 31.15. So let me get this out of the way. Where's 31.15? Okay, so I bought off the high of this previous day, so Friday, Thursday, Wednesday, off the high of Wednesday. Thursday made higher highs, higher lows, great over the 8-day exponential moving average, great price relativity, and huge buying volume. All great signs. Next day, today, higher highs, higher lows, stays over the 8-day moving average, consistent buying volume, great price relativity. So this isn't a stock that has completely taken off. You can see it's close enough to that base where we might get one more little pullback before it really gets going. But if we do open up lower on Monday and then the stock starts moving up and starts showing momentum, then that's great. So that's great for me, and you can get in the trade as well at that point. My stop, let's see. I have two stops, one at 30.37 and 29.62. I think that's below the 8-day exponential moving average and below the 20-day. So bracket stop loss there to get me out, scale me out if I'm a little bit wrong, get me out completely before the trade falls apart. Because even though this is a great setup, doesn't matter. Things can go wrong, trades can fall apart. I want to be wrong, but I want to be wrong small. Let's do 3 more and then we'll cut the stream. So Goldfield Corp, this is one that I had been eyeing and bought a small position today. But zoom out for the full picture. We got a run of 85% from the lows, double coiled here, and then it's repeating the exact same pattern as it did before it took off last time. So last time you have a run of 28%, then pulled back right to that 8-day exponential moving average around 11%. And what's kind of concerning with this one was the high selling volume on that, but I wasn't in the trade at this point, so that's fine. But stuck right at that 8-day exponential moving average, and then popped up with good volume, rose higher, pulled back down to the 8-day exponential moving average. So this to the peak was 17%. And I did take the trade. Let's see, when it, I never try and trade in the first 30 minutes. DraftKings, yeah, we'll get to that one. Don't try to take the trade in the first 30 minutes because in a choppy market, you could just be getting head fakes each time. So when it pulled back down and got to that, just above that entry price, I bought in. When it hit below the 20-day simple moving average, I did scale out a little bit. So already taking a little bit of a loss on this. But because this is a really light volume stock, it's not going to react as much to the entire market as possible. You see today it was basically flat, down 1%. So overall, looking for this to make a similar move higher, and not a huge win. If it goes up 15%, I'll take the profit there. But something I'm looking at into next week. And APD, that'll be the last one before DraftKings. So this is one that I had tried to trade, got stopped out. I think for flat or maybe a little bit of a profit here. But it's showing great, look at this price relativity. That's monster. High volume, either accumulation or selling. That doesn't really paint a clear picture to me, but the high volume with the strong price relativity, that hints at this is going to be a strong stock when the market takes off. So drawing that diagonal down here, let me fix that a little bit. So again, you're not trying to overtrade in a choppy market, but if you're already light in positions or cash heavy at this point, and you're looking at a stock on Monday, next Monday, a move over 304.15, and the entire market coming back could really shoot this up. This is an ideal setup, but just because it's an ideal setup doesn't mean it has to work. This is just something you're looking for. And then if you do get in the trade, let's move this down. You have that 8-day exponential moving average right around the low of Friday today, and then also the 20-day simple moving average and the low of the previous day. So you can use those bracket stop losses for a really tight stop to get you out if the trade works against you. So good risk reward on this one going into next week. And we'll wrap this up with DraftKings. So DraftKings is another one showing good price relativity compared to the NASDAQ. Moving up. This keeps on popping and then pulling back on lower volume, which is exactly what you want to see in a strong stock. So, man, what was the day that Jordan said he was in on it? I think it was September 2nd. Yeah, so I want to say this was the day Jordan got in, Michael Jordan. Pulled all the way down, looked like it was going to be a loser, but Jordan never lost a 3-1 lead, so it immediately popped right back up, bounced off the 8-day again, and then markets got really shaky here, but found some footing, bounced off the 50-day simple moving average, moved up higher here, and look, huge buying volume here, lower selling volume, short-term sellers, and then volumes ticking up each time it's a green day. And then on Friday today, we get a red candle outside the Bollinger Band because the market was shaky today. And on basically half the volume that we got into the buying days. So I've been watching this trade, haven't gotten into it personally, but think that this is a great setup. If the market does turn back, this has strength, this has volume, this has Jordan. It's going to be a win. But always use stops because not everything's guaranteed to be a win. All right, let's see. Is that all I had? Yeah. All right, so that's week 4 of Stock Tricks with Nick. If you enjoyed your time here, if you learned anything, please leave a like on the video, share it with any fellow traders, anyone that you might think would find it useful. Follow me on StockTwits or Twitter. StockTwits, I do about 40 to 50 charts a night. Twitter, I'll narrow that down and really post like the 3 or 4 stocks that I'm looking at going into the next day. Both of those links are in the description below this video. Also, make sure you subscribe. So I do these every Friday, 7 p.m. Central Time. Let's see, if you're watching this outside of the live stream and you want me to review a stock, leave a comment with that stock ticker and I'll get to as many as I can get to. Outside of that, with the market staying choppy going into next week, small position size, try to offset some of your longs with shorting weaker stocks. So you get that hedge benefit and you still have momentum going in your way on the short side too. So any positions I have long positions with stocks showing good price relativity or relative strength, and I'm shorting stocks with relative weakness. Keep position sizes small, always use stops, bracket stops are great. And if you have any other questions, comments, feel free to reach out to me on StockTwits, Twitter, or in the comment section below.